Hi everyone, my name is Alfred Bassi, your friendly chartered insurance consultant. Welcome to my YouTube channel for ABC of Insurance for Beginners. Today we'll be talking about Module 2, which is the principles of insurance. You're going to learn a lot about the principles of insurance and what it means. Always remember that insurance is a sure way of protecting yourself, your family, and your business. So, Module 2 for principles of insurance, there are 7 principles of insurance. The first one is a principle of utmost good faith. We have the principle of insurable interest. We have the principle of indemnity. We have the principle of contribution. We have the principle of subrogation. We have the principle of loss minimization. And we have the principle of causa proxima. So let's get to know the details for each of these principles. We start with the principle of utmost good faith. Now, what does utmost good faith means? Both the insurer and the insured must be honest and transparency. There must always be transparency when a transaction is about to start. All informations are laid out. You must disclose all important information. The insurer must clearly explain policy terms. Let's give an example. If somebody hides a health condition when buying insurance, claims may be rejected later. So we'll now look at principles of insurable interests. You can only insure something if you will suffer loss. You must have an interest in that, whatever you want to insure, and if it is damaged or lost. The examples are, you can insure your life, you can insure your house because you spend so much money, or the investment that you have inside the households items, but you cannot insure a stranger, and you cannot insure a third party's property because you don't have an insurable interest. Next, let's look at the principles of indemnity. Insurance aims to restore to you the original financial position, not to make a profit. So the original position that you were in, and an event occurs, that is when the insurance company comes to pay you to reinstate you back to the original position you were in. We are not to make a profit. Example is, if your car worth 2 million is damaged, you only be compensated to that value, not more than that. When I look at the principles of contribution, it multiplies insurance cover, the same risk. They share the same compensation. So if you insure here and insure in insurance company A, and insure in insurance company B, when the claim calls, the principle says that when the claims occur, both will come and share the compensation. That's the meaning of the principles of contribution. So examples is, if 2 companies insure your property, both will contribute paying the claim. Now we'll look at the principles of subrogation. After paying your claim, the insurer has the right to recover the loss from a third party responsible. For example, if you can know for an example, if another driver damages your car, your insurer may pay you first, then recover the money from the driver. If you can recall, if there's always an accident, you as the insured, you ask the person, please give me your insurance. Do you have your insurance papers? Insurance will take care of your vehicle if it's a comprehensive, and later will collect the contribution, the subrogation from the third party. So another one is the principles of proximal costs. The insurer only pays if the main cause of loss is covered in the policy. That is why in each policy, there's what is covered and there is what is not covered. It is only those items listed on the policy documents that will be covered. Example is, if a flood damages your home, which you have insured, but the flood is not covered, the claim may be rejected. So if there was no cover for flood, but fire, and a flood occurs, it will not be covered. This principle guides how insurance works and ensures fairness and trust. So the 7 principles, the main objectives of the 7 principles is to guide how insurance works and ensure fairness and trust. Now, quickly, let's delve into some quiz, principles of insurance quiz, and let's see how far we all understand. Quiz 1, principles of utmost good faith, requires A, insurer hides information. B, both parties must be honest. C, claims are ignored. D, premium is optional. So which one do you think would be the best? B is the answer. Both parties must be honest. Quiz 2, principles of insurable interest ensures A, you can insure anything. B, you will suffer financial loss if insured item is damaged. C, insurer profits. D, claims are paid automatically. What do we think the right answer would be? B, you will suffer financial loss if insured item is damaged. Quiz number 3, principles of indemnity means A, insurance aims to make a profit. B, insurance restores the original financial position. Claims are optional. That's C. D, policies cannot be renewed. So what would be the right answer? B, insurance restores the original financial position. It's meant to restore to you back to the original position before you insured. You had insurance cover. 4, a principle of contribution applies when A, you pay multiple premiums. B, multiple insurance share compensation. C, you hide information. D, policy expires. What do we think the answer is? It's a B. Multiple insurers share compensation. Quiz number 5. Subrogation principle allows A, insurers to recover losses from a third party. B, policyholders to keep extra money. C, claims to be ignored. D, premium waiver. A is the right answer. Insurer to recover losses from a third party. So 6, with 6, proximate cause principles requires A, only the main cause of loss is covered. B, all causes are automatically covered. C, claims are unlimited. D, premium is doubled. What do you think the answer would be? A, only the main cause of loss is covered. Let's go to quiz 7. Which principles ensures fairness and trust? Is it indemnity? A, B, theft, C, claim, D, coverage? A, indemnity. Quiz number 8. What happens if you misrepresent information in a policy? You don't give the true information. A, nothing. B, premium reduces. C, claims may be rejected. D, insurer pays extra. C is the right answer. Claims may be rejected. And that's why a lot of insurances are rejected because of such things. Misrepresentation of information in a policy. As we round up the quiz 9, principles of utmost good faith protects. Is it the only insurer? A, B, both insurer and insured? C, government, government, D, agent. The right answer is a B. It protects both insurer and insured. Quiz D. Principles of indemnity does not A, restore loss, B, make profit for insured, C, protect policyholder, D, manage risk. Answer is B, make profit for insurance. So I hope with this quiz and the answers, we are more acquainted with the 7 principles of insurance. So here we come to the end of Module 2. And thank you for listening. This is a call to action. Please like, share, and subscribe to my YouTube channel to learn more about insurance and how it can protect your future. The number is shown on the screen and the email. Any questions, you can always send an email or you call and it will be answered. So don't forget to watch out for Module 3. In Module 3, we'll be looking at types of insurance policies. I guess it's getting interesting now. We all know much better right from Module 1 and Module 2 now what insurance is, and we can proudly discuss it wherever we are. See you then. Bye.